I mean, I could legit go pre-order 10 semi-trucks right now with no commitment to actually buying them. Seriously, go check it out. It's absolutely insane. Okay, guys, we got to have a serious conversation here about the stocks you really need to avoid. And I'm looking at this Robinhood list here, and it's getting pretty scary looking, if I'm honest. Roll it. What's going on, everybody? My name is Brad, and this is Own the Chaos. The stock market is crazy, it's chaotic, and I've made it my mission to help you own it, make some money, and make a positive impact on your life. Although today, rather than helping you make money, I want to help you try not to lose it. Now, I am looking at 3 of the top 5 stocks traded on Robinhood this past week, and it's pretty mind-blowing that 45,000 additional investors bought GNUS, 75,000 bought Hertz, and a whopping additional 105,000 people from Robinhood alone bought Nikola Stock, a company that has literally no product, no revenue, and a boatload of debt that was the number 1 traded stock on Robinhood last week. Okay, so here's the thing. I know I'm probably going to get a lot of hate comments about how you made a bunch of money on one of these, and if you did, great. Ride the momentum and get the hell out. However, a record number of retail investors hit the market, and many of them have yet to have really lost that much until this past week, right? The markets literally have only gone up since March, and I'm sure many of you have had this euphoric feeling of, you can't lose. I'm probably speaking to some of you, am I right? Hit that like button if I am. And now investors are getting pretty reckless at this point. So let's take a look at these 3 stocks that those of you on Robinhood and elsewhere have continued to buy and see why these don't make good investments and why they are so risky. First, let's look at Hertz, ticker symbol HTZ, and is currently trading at $2.75 a share, because this is one that just really blows my mind the most. Here's a company that filed for bankruptcy on May 22nd, which tanks the stock from $3.50 to about 40 cents a share. Billionaire investor Carl Icahn then liquidates his stake in the company, admitting that he sold over 55 million shares and took a $2 billion loss as a result of the bankruptcy. Then, beginner investors start looking at Hertz as if this is like a bargain and will make a nice grab for some cheap shares. And admittedly, if you were able to grab some on the cheap, under $1, you probably made some decent returns over the course of the next couple of days. Now, if you chase this all the way up to $4, $5, and even $6 a share, and by the looks of it, 75,000 of you did just on Robinhood alone, you are in a world of hurt right now, and it's not going to get any better, I'm afraid. Hertz themselves, the actual company, is warning investors that they will eventually be worthless. Not only that, but they are so far in the hole that they're willing to dump another $1 billion worth of shares on you in order to pay for the cost of bankruptcy operations. They didn't expect this kind of run-up on a bankruptcy. It makes no sense, which is why I'm talking to you guys about this right now. On Friday, Judge Mary Walrath of the U.S. Bankruptcy Court in Delaware said Hertz could raise as much as $1 billion through the sale of new shares, which means those shares are going to get dumped on you. Hertz filed papers with the Securities Exchange Commission, or the SEC, Monday for the sale of 500 million shares. Hertz did tell the court it would alert buyers of the new shares that common stock in the group could ultimately be worthless once the bankruptcy proceedings are concluded. They go on to say that the recent market prices of and the trading volumes in Hertz's common stock potentially present a unique opportunity for the debtors to raise capital on terms that are far superior to any debtor in possession financing. Lawyers from White & Case, which is representing Hertz, told Judge Walrath this last week. Guys, don't you understand how this is working? You're buying this up simply so Hertz can continue to dump on you. This is not good at all. This goes even further, people. Hertz is still in trouble and will still be selling all of their cars and liquidating everything. And the scariest part of all of this is how they can even liquidate your holdings. Yes, you heard me right. Any given time, you could be looking at your Hertz position and it will be read as $0. They can liquidate your equity in the company and you don't get that money back, period. That's what worthless means, folks. It's worthless. I really hope that you heed this warning from Hertz and myself, that if you think somehow this is going to you're going to be able to recoup your loss here if you chase this, you may be sadly mistaken. Now, real quick here, before we get to Genius Brands, I wanted to invite you over to check out the Chaos Crew. By clicking the join button next to subscribe, you will get a watch list of 5 stocks that I think are worth watching 1 hour before the market open. This will give you a head start on the day. It continues to help support this channel. And for $4.99 a month, I think it's a heck of a deal. And if you do too, I would love to see you there. Okay, so now that we got the Hurt from Hertz out of the way, this next one is going to be Genius Brands, or ticker symbol GNUS, which as of this recording is trading at $4.50 a share. Now, if you didn't catch it, I spoke about GNUS previously when I went over the top 10 stocks being traded on Robinhood last month and felt as if it had a lot of potential to be good, but there are a lot of inherent risks here. I mentioned at that time that there had already been 2 offerings issued as the value of the stock started to increase, and that if they issued any more, that's when it was going to get ugly. So what happened? It got ugly. Since that video, the stock soared from $4 a share all the way up to $11 a share, which was nearly 200%. An amazing move, right? And incredible for those of you who got in on the ground floor of this thing at 30 cents. And it was just an amazing trade. But for the 45,000 plus of you who bought this past week, it still may be a bumpy ride. And I just can't see how this ends well for you, in my opinion. But let me back up for a second and let you know how we all got up to this point. On May 6th, Genius announced that the planned launch of its Kartoon Channel digital network, which is a children's educational platform that will be hosted on several major media platforms, including Amazon Prime, Apple TV, and Comcast. The news is what caused this insane buying, and it sent the share soaring several thousand% from about 32 cents a share on May 5th, and as I mentioned, over $11 a share just about a week and a half ago. An incredible move. And I'm not taking anything away from that, especially if you were able to make bank on this. But for those who think this thing is still going to keep ripping, here's 2 things to consider here. Genius Brands reported first quarter earnings on May 18th, and the results were abysmal to say the least. Total revenue dropped 72% year over year from $1.2 million to $334,000, while losses from operations grew 42%. From $1.2 million to $1.77 million. The poor performance is due to weakness in Genius Brands' television and home entertainment segment, which fell from $850 million to $52 million year over year. Are you hearing me here? It lost $800 million. Now, their plans with this launch of its new Kartoon Channel is what got people so excited, but the impacts of this move are so speculative, and even the price that it's at now is seriously overvalued, in my opinion. And so far, the company does not have a real track record of developing successful media products. Its Rainbow Rangers show, which debuted on Nick Jr. in November of 2018, has so far been unable to power any sustainable revenue growth. Now, management said it expected to see significant growth over the next 2 years after season 2 of the series was approved for the 4th quarter, but on what grounds? They've been so extremely vague on this, which really raises even more red flags for me. The company's Llama Llama series, same story. The preschool show, which is hosted on Netflix, has also failed to power any sustainable top-line growth despite being renewed for 2 seasons. GNUS also has a terrible balance sheet, with $2.76 million in cash and equivalents on its books compared to $14.1 million in warrant derivative liabilities, which is a perfect segue here, and that is just how much they can dilute this stock to raise capital, which they will continue to do. You can bet on that. Now, if you don't understand derivative liabilities, that is dilution, folks, which means that you can convert those liabilities into shares in exchange for cash and leave you with a far less valuable position. That's on top of the 3 offerings they've already issued in the last month, which is also a form of dilution. This increases the total number of shares outstanding and puts a downward pressure on the value of existing shares in the company. Those who understand dilution hate dilution. On May 28th, Genius Brands agreed to sell 20 million shares of common stock at $1.50 per share for proceeds of $30 million. This sale follows 3 other securities purchase agreements with proceeds of $9 million, $2.8 million, and $5.4 million, respectively, in May alone. The company issued these shares at prices ranging from 35 cents to $1.20, which is significantly lower than the current stock price of $4.50 as of this recording. By selling this stock for lower than the market price, Genius Brands gives new buyers a very good incentive to buy shares in such a high-risk stock. But this, in the end, will screw anyone over who bought this higher, which, as we all know, is a lot of you out there. So this is why, in my opinion, Genius Brands is a terrible investment, at least at these prices. This will continue to get diluted, folks, and it won't be pretty. Lastly, we have Nikola, ticker symbol NKLA, and currently trading at $62.50 per share, and I'm already prepared for the shade that's going to get thrown my way here. I can already visualize the comments about people who bought this at $12 or something like that, and then bought themselves a Lambo with the money they made. So let me stop you and congratulate you on an amazing run, and if you sold, you were smart. But if you are the 100,000+ people on Robinhood alone and other retail brokerages as well who bought this at $70+, let's step back here and look at the big picture, because this is still sitting at a ridiculous price for what the company is actually worth at this point. This company, as it stands of this recording, has a $25 billion market cap, and no orders, no pricing, and no manufacturing has taken place. All we have is hype and a promise. At one point last week, it had a market cap that was higher than Ford, Chipotle, and even Twitter. I mean, ask yourself this honestly, and really ask yourself, do you think that Nikola has proven enough to be worth more than those companies at this very second? It doesn't. Really, be honest with yourself. It doesn't. The valuation of this company is set to be around $3.3 billion by 2024, which is still a ways off. And where it's trading now, it is 7 times that amount. 7 times its expected valuation, which means you are paying a premium that's higher than Tesla's by a mile. Not to mention the expected valuation of this company is based off of some really loose numbers. I mean, I could legit go pre-order 10 semi-trucks right now with no commitment to actually buying them. Seriously, go check it out. It's absolutely insane. Not to mention, I also find it weird that former CEO Trevor Milton sold off a bunch of shares and is sitting pretty after everyone ran this thing up. Yes, you heard that right. He's the former CEO and now only a chairman of the board. This whole thing seems very strange to me, folks, and I don't get it at all. And before I get to the rest of this, I got to ask you your opinion as well. So let me know in the comments. But Nikola, why would you name a company Nikola when your direct competitor is Tesla? It's like someone creating a car company and calling it Henry because Ford was taken. Or starting a tech company and calling it Orange because Apple already exists. So why not, right? Let me know what your thoughts are on this, because I'm really perplexed by why they would choose that name. Nevertheless, to try to hammer my point home on Nikola, everyone who is so passionate about this company wants to compare it to Tesla when it can't even hold a candle to it yet. Tesla has manufactured cars, they're cash positive on 3 quarters in a row, and they've built in an infrastructure in a way that only Elon can construct. Nikola has yet to have proven a damn thing, and it will not surprise me if we see a sizable offering or two at these prices, because they need capital to do things that they've promised investors that they would do. Do not be surprised if we see this back at $15 a share before it's all said and done. To be perfectly clear, this isn't me bashing the company, folks. I still think this is going to be a valuable company if, and only if, they can pull this off, and I honestly hope they do. But there isn't a shot in hell I'll be buying it all the way up here, and will gladly wait for a fair price, wait for them to have some sort of operations and legitimate buyers before considering to buy this stock. Guys, I wanted to put this video out because it's important to know what you're buying, and what I've been seeing is a lot of blind investing into things that just make no sense. When stocks that are overvalued like this are surrounded by this much hype, it only ends one way, and it isn't a happy one. But let me know in the comments below your thoughts on these, and if you happen to miss my video on stocks that have proven to be recession-proof, click this video here, and if you missed this week's Stock Watch Sunday live stream, click this video below here. Please like and subscribe, and as always, folks, I will see you all before the bell, and B Smith is out.